Well, hello and welcome. This is another solid set of numbers from Cognizant. Revenue has gone up to $1.892 billion versus the 1.875 guided last quarter. Revenues have sequentially gone up 5.4% and also year-on-year growth of 18.2%. Cognizant has also reaffirmed its financial year 2012 guidance to go up in revenues by to $7.34 billion. That's a 20% growth. Joining us is Karen McLaughlin, the CFO at Cognizant, joining us from the company headquarters in New Jersey. Karen, it's a pleasure having you on NDTV. I'll just come to the financial parameters in just a while. How does Cognizant see the re-election of President Obama?
Thank you, Madhu, and good morning to everyone in the U.S. and good evening to everyone in India. Obviously, the election results came in very late last night. I confess I didn't make it. Generally speaking, people are happy that the election was resolved quickly. So I think that's a positive movement so that the country can get back on with its job of running the country. I think obviously with President Obama, we have had 4 years of experience. I think people understand his agenda, and I expect he will continue to take actions on the things that have been important to him around health care and obviously getting the economy back on track. And so I think we look forward to seeing what actions and what his agenda is as that becomes more apparent in the next several weeks.
Right. I know it's probably too late, but would you rather have, or even for outsourcing at large, would you have preferred a Republican sort of 4 years than, for business that's more outsourcing based? Would that have been better? I know it's too late.
I think under either of the candidates, I think there are significant opportunities for firms like ours to continue to be successful. I think the reality is that our focus is on delivering services to our customers, and our customers have what we call a dual mandate, which is they need to focus on achieving cost efficiencies and effectiveness in their business while looking for ways to free up investment dollars to drive innovation. And that's true for customers around the globe, not just here in North America. And I don't think that mandate changes regardless of who won the presidency last night. I think obviously there may be different focuses. So I think under President Obama, obviously he's talked a lot about health care reform. He's talked a lot about regulatory issues in financial services, both of which, we have large presence in the healthcare and financial services industry. So clearly there could be some work that we do there to help customers. What changes in terms of immigration or other legislation that might impact outsourcers, I think is too early to say. But we've certainly positioned ourselves as a global provider, and we have the structure in place to deliver services effectively around the globe for our customers. And we will, obviously take into account any changes in the environment or legislation that we need to, but I think we're well positioned to continue to be successful.
Okay, I'll come to the financials now. Great set of results yet again. Karen, can you break it up for us? Of course, banking and financial services has been the big performer of sorts, and that's been your strength. Can you break it up for us?
Sure. So we were very pleased with our Q3 results. I think, as you mentioned, we did see a little bit more pickup in the financial services segment than we had originally expected when we provided our Q3 guidance back in August. So as a segment, banking and financial services and insurance grew about 7% sequentially. And that was comprised both of our insurance practice, which we've talked about now for several quarters, is really having a stellar year and continues to see a lot of growth into Q3 and looking forward, as well as some recovery in our banking clients. Particularly, we saw good growth across our large banking clients. So we've talked in Q2 about our mid-size or Tier 2 banking clients and how they've become aggressive adopters of the outsourcing model. But we did see a return to spend with some of our large banking clients, too, and that was both in North America as well as with our European clients. And we were very pleased to see that. I think it's too early to call it a trend, but we are cautiously optimistic that banking's on a bit of a rebound. I will say, one of the things we've been talking with other folks this morning is obviously the capital markets industry is having a tough time. Fortunately for Cognizant, we do not have a lot of pure play capital markets clients, so we are mainly working with money center banks and sometimes with the capital market segments within those money center banks. But the big change that we're seeing is all of our large banking clients are looking for ways to really further drive cost efficiency and effectiveness and continue to drive innovation, and so they're looking to us to help them with that dual mandate moving forward. In terms of our other industry segments, our retail and manufacturing and consumer goods segment also had a terrific quarter. They grew 10.7% sequentially, and they've had a very strong year throughout, so we're very pleased that they continue to be on a strong trend. Typically, that segment in Q4 slows down a little bit because discretionary spending, or really the development work in retail clients, tends to slow down as they get into the holiday season and they become distracted with that. But certainly for Q3, we saw very strong growth there. The healthcare and life sciences segment was the one segment where it was essentially flat sequentially. And as we had talked about earlier in the year, we have seen some challenges with the life sciences or the pharma industry in particular as they've gone through this patent cliff during the year, and we continue to see some impact from that, as well as some impact from M&A within the healthcare segment.
About a couple of quarters back or so, Francisco was mentioning, my colleague Namrata, about how banking and financial services, especially in some parts of North America, is witnessing some sort of a stress or a weakness. I know you touched upon it a little, and I know you're not committing if it is a trend, but what do you see? Is that sort of a trend past, and have you crossed that sort of a trend?
So I think in banking and financial services, it is a little early to say it's a trend. But I do think, as we look forward, I think, another quarter or two of good results in banking and financial services, I think then we'll be a little more comfortable calling it a trend. Obviously, with the presidential election behind us now, the interesting question for financial services going into next year will be the impact of regulatory changes and what impact that might have on the business. We believe there's a lot of development work that has to go on to support those regulatory changes. The question will be whether that's incremental work or do clients make trade-offs with other work that they might have done otherwise.
Okay, is that why you're sort of reaffirming the 20% growth projection for this financial year as well?
So I think, obviously, we had 3 quarters behind us, and when we provided our Q4 guidance this morning, we do have our October results. So we are very comfortable with the guidance that we provided for Q4 of 2.6% sequential growth. Typically Q4 is weaker than Q3. A lot of it's due to holidays and sometimes plant closing and so forth with clients. We have a very small impact from Hurricane Sandy, very, very minor, but certainly that limits some of the upside that we might have had going into the quarter.
All right, healthcare, as and you did mention about it, healthcare and life sciences and pharma has remained flat. Why?
So it's really 2 things. So if you think about the life sciences clients for a moment, as we've talked about since Q1, really, there is a patent cliff that hit the life sciences and pharmaceutical clients very hard in the early part of this year. Now, what's interesting with our life sciences clients is we've talked to them in the last few weeks, and we looked forward with them as to how they see 2013 and beyond playing out. We actually think that the pharma clients are starting to be more bullish around 2014. There are some new drugs in the pipeline that people believe will begin to help them as you get out past next year. I think 2013, obviously we haven't provided guidance yet, but I think from their perspective, they see 2013 will continue to be a challenging year. But we do think long-term there's a lot of opportunity in life sciences. We also think in life sciences there's a lot of opportunity around our Horizon 2 and ultimately our Horizon 3 services as clients look for more ways to deliver services globally with different partners. On the healthcare side, as we talked about, healthcare had been fairly strong. We've seen a little bit of M&A distraction in healthcare, but I think healthcare will also be interesting from a regulatory perspective as we go into next year, and what impact what impact the Healthcare Reform Act has on our healthcare payer clients moving forward, and what work they need to do to accommodate that.
All right. let me talk about pricing a little. Again, in your Q2, when we spoke to you, you had mentioned about a flat sort of a pricing. How has it sort of remained so, and what's the trend suggest?
Pricing for the quarter was stable, and I think it will remain so for a while. Back in sort of 2010, early 2011, there was obviously a lot of pent-up demand for rate increases, and people were able to obtain those. I think this year, certainly, and into the early part of next year, I think you will see pricing be stable. I think you will continue to see people get rate adjustments that are in line with inflation, but I wouldn't expect to see any big jumps in pricing going into next year. Simultaneously, I think all of our peer group are very disciplined about pricing. So I think as a group, our competitors understand that aggressive pricing can be a race to the bottom. So you tend to see people be very disciplined amongst the group of competitors that we see in our customer base.
Right. One thing again, which has set Cognizant apart, Karen, is the focus on sort of the Horizon 3, which you call it, or the SMAC sort of an approach in Francisco's terms. How is that looking, and what sort of a growth do you look for the social, mobile analytics, and cloud sort of a segment?
So, Horizon 3 is really our long-term future growth model, we believe. Today, we're seeing very good growth in our Horizon 3 businesses, so whether that be our new geographies such as Latin America or some of our new vertical industries, some of the government, quasi-government work we're doing, and particularly around the SMAC stack, as you mentioned, social, mobile, analytics, and cloud. But it is off of a very small base. But at our recent Cognizant community event here in Phoenix in October for U.S.-based clients, there's a lot of discussion around the SMAC stack and how customers are thinking about these new delivery models moving forward, and what types of support and assistance they're looking from partners like ourselves to help them with. Clearly a lot of good dialogue going on. I think we'll see a lot of growth coming out of that Horizon 3 business over the next few years as we expected. Just to step back for a moment, I mean, one of the other things we were very pleased to be able to talk about this morning on our Q3 call rather, was our Horizon 2 business, which really is one of our major growth engines today. So our Horizon 2 business, which comprises our consulting, infrastructure services, and business process outsourcing practice, is approaching 20% of our total revenue. So we've seen very significant growth in all three of those groups over the last few years. And as I said, they now comprise almost 20% of our revenue, and each of them are growing significantly faster than company average, as we had expected them to. But that will be a major growth driver for us in the short term, while the Horizon 3 businesses begin to grow to maturity and become the long-term growth driver for the organization.